I've been talking about this, on the channel. It's honestly, the channel is for my own good, just to get my voice out, because I have all these thoughts in my head and might as well put it on a channel. Maybe 10, 20, 50 people will watch and learn something and protect themselves from what's about to happen. I think market is the perfect pricing mechanism, and it's pricing in a slowdown. So what it's doing is it was pricing in a soft landing. Okay, well, that's gone now. So unequivocally, that's gone. So well, now it's pricing a slowdown. Why? Well, look at all the macro data that we're receiving. 2 months in a row, consumer confidence is in the toilet. Okay, why is that important? It's important because 80% of our GDP is consumer spending. If we don't get the plastic and spend, economy doesn't go anywhere. We don't manufacture anything. So that's one part of the macro picture. Second part of the macro picture is the consumer is already stretched and inflation did not go away. When you're paying $10 for a dozen eggs, yeah, inflation did not go anywhere, as the Fed tried to do or kill inflation with raising rates from 0 to 5.5% in short period of time. And we know what happened to the market then. We had a 30% drawdown. So because then, even just like now, market was not pricing in an interest rate hike, a quick interest rate hike of that magnitude. And market always prices things in. And market's always 6 to 8 months ahead of what's about to happen economically. It's a good fortune teller, actually. So what you need to now pay attention to is what's happening in the macro to create a thesis for yourself. Okay, well, I've created this thesis a couple of weeks ago. Let's take care of some business while I'm at it. We have a wonderful members group on Telegram. So if you do choose to become a member and support the channel, appreciate it. You're getting me for a Big Mac. I think it's worth it. But you're also getting 4 extra members only lives every month, every Wednesday, 3 p.m. Pacific, 6 p.m. Eastern, time to be determined on those. You get the replays of the members only lives. You get direct access to me, obviously, in those lives. We can fix whatever you have problems with. There's a free access to a Telegram chat group, which we have about 25 of us in there now. It's been on fire. The other thing you get is you get my trades live. I execute the trade within 30 seconds. I put them there. None of this is trading or financial advice. If you want to participate, but I put my trades in as far as when I'm entering and when I'm exiting, what my goals are, what my thought process is, and you can tag along. Again, none of it is trading or financial advice on the Telegram chat group or here. And the last thing you get is this beautiful T-shirt, manufactured by Gig With It, and we all wear it because the name of the chat group or member group is #KnowYourWorth. So did I know my worth this week? I think I did. So going into this, I mean, the members know I just keep saying keep bullets, save powder dry, powder dry, powder dry. And today I started tippy-toeing in the shallow end of the pool, and I will keep doing so because I was about 80% cash going into this. And I saw this coming and I cleaned the account up. I had some bunch of riffraff, garbage in there. Again, why? Because of experience, because I've seen this movie before. I'm not overly bearish, by the way, so don't get me wrong. But I think we're going to have a multi-leg down move. So we're going to have a face ripper rally here next couple days. It'll probably last 3 days. FYI, bear market rallies are more fierce actually than bull market rallies. So on bull markets, what we do is we just keep grinding higher, make all-time high after all-time high. On bear market rallies, we swoosh down, we snap back up, and then when you look at my rubber band theory, right at the moment, the rubber band is stretched pretty much as it could get stretched. Now, some of you may say, well, what if the rubber band breaks, Serge? It doesn't, because we have guardrails against that. We didn't have guardrails in the 87 crash, on dot-com bubble and things like that. But during the GFC, we put so many guardrails for it not to do so, such as, trading halts. We have daily limits. And I mean, daily limits are so big that, it doesn't matter, honestly. But rubber band won't break. The system will not break. If the system did not break in 2008 great financial crisis, I don't think it's going to break, and I don't think the Fed would allow it to break. So with the rubber band theory, we're pretty stretched. That's like a bungee, right? Jumping off a bridge, as crazy as you may be, because this is the same thing with the stock market. It's a bungee. So you jumped off the bridge. What happens? The first stretch is as far as it's going to get stretched, right? And then what happens? There's a snapback. You won't go all the way there to the top, obviously, but you will go maybe halfway, maybe 3/4 of the way, and then you'll fall again. The second bounce will be less. The third bounce will be less. So figure the analogy that way, that, we have stretched the rubber band as much as we can for this leg. We will have a rally. We will have a rollover. We will retest, because look, you may like technical analysis, you may not like technical analysis, you may agree with it or not disagree with it. Granted, charts are telling you the past. They're not going to tell you what's going to happen in the future, but patterns do repeat, okay? And selling comes in waves, just like buying comes in waves. So when we were going up, what were we doing? We would make an all-time high, strong move, then we'll consolidate for a couple of weeks, and then to gather energy for the next leg up. Well, now this is going to be the opposite. Just turn it around, right? So we had this massive drawdown. Well, not massive, 10, 12%. We'll bounce, maybe halfway. If not, wherever. We'll figure that out. The bounce's strength, by the way, will tell me how weak the market is.